Join me as I dive deep into the mystery of why the US dollar gets stronger during economic crises, and I'll try to explain it all in just 5 minutes. Why does the United States dollar often strengthen during economic crises when you would expect the opposite? The strengthening of the United States dollar during economic crises can be attributed to several factors, rooted in its role in the global economy and the dynamics of financial markets. These include safe haven status, higher interest rates, status as the global reserve currency, liquidity and depth of US markets, trade dynamics, and psychological factors. The combination of these factors often results in a strengthening dollar, even when logic might suggest a weakening due to domestic economic issues. However, this strength can be temporary or might have different impacts over different time frames, especially if the crisis is long-lasting or fundamentally alters global economic conditions. This phenomenon is well documented in macroeconomic analysis, where the dollar's behavior during economic downturns or crises often defies simple expectations based on domestic economic health alone. Traditionally, during economic crises, economic theory suggests that currencies are expected to weaken due to capital outflows, decreased demand, inflation pressures, and loss of confidence. Contrary to the typical expectation, the US dollar has shown a tendency to strengthen during recent global economic crises. The US dollar is often seen as a safe haven currency. During times of global economic uncertainty, investors tend to move their money into assets perceived as stable. The US economy, despite its own crises, is often viewed as more stable compared to many other economies due to its size, depth of financial markets, and the historical stability of its political system. This influx of capital from around the world increases the demand for dollars, thereby strengthening its value. When facing inflationary pressures or economic overheating, the Federal Reserve might increase interest rates to curb inflation. Higher interest rates in the US compared to other countries make US debt instruments like Treasury bonds more attractive to foreign investors seeking higher yields. This leads to an increased demand for dollars to purchase these securities, pushing up the dollar's value. The dollar's role as the world's primary reserve currency means it is widely used in international trade for denominating commodities like oil, and as a peg for many other currencies. In times of crisis, central banks might increase their dollar reserves to protect against their own currency's volatility or to maintain the value of their currency pegs, which supports the dollar's strength. The liquidity in US financial markets is unparalleled, making it easier for investors to move large sums without significantly affecting prices. During crises, this liquidity becomes even more valuable, leading to capital flows into US assets, further supporting the dollar. A crisis might reduce global trade volumes, but if the US exports more than it imports, or if there's a decrease in imports due to economic slowdowns elsewhere, this can also contribute to a stronger dollar in the short term. During crises, even if they originate outside the US, there might be a psychological tendency or market sentiment favoring the dollar. Investors might feel more secure with US assets due to the perceived robustness of US institutions and the economy's ability to weather storms, at least in relative terms, to other countries. When other countries are lowering rates or engaging in quantitative easing to stimulate their economies, the US might not follow suit to the same extent, or might even tighten policy if inflation is a concern. This divergence in monetary policy can lead to a stronger dollar as investors seek the relative safety and yield in the US. This analysis explored the counterintuitive trend where the US dollar often gains strength during global economic crises. Despite economic theory suggesting currencies should weaken in such scenarios due to factors like capital outflows and inflation, the dollar benefits from its status as a safe haven, the attractiveness of higher US interest rates, its role as the global reserve currency, and the liquidity of US markets. These factors collectively draw capital into the US, bolstering the dollar's value. This phenomenon underscores the complex interplay of global finance, where psychological factors, trade dynamics, and monetary policies significantly influence currency strength. What are your thoughts on this dynamic? Have you noticed other factors not mentioned here that might influence the dollar's strength during crises? Share your insights or experiences in the comments below.